Happy Tuesday, everyone. Welcome aboard to a new session of charting across the board. We're having Talking Heads, the band in the background from an iconic Wall Street movie from the 1980s with Charlie Sheen as the analyst and the corporate giant Gordon Gekko. The song titled This Must Be the Place. I hope each one of you are doing great, are alive with this volatile market, where today we're going to be focusing on a pattern, one of the strongest patterns within the harmonic framework, the butterfly, either bearish butterfly or bullish butterfly. I wanted to bring this context here, this topic on the butterfly effect, thanks to our member, Flower Gardener, as we were talking in the background, and she recommended to come with this title, or the title. Therefore, the thumbnail is due to our friend Flower Gardener, which, by the way, the term butterfly effect, also if it wasn't for her, I was not going to be aware. However, the term butterfly effect, because allow me here, I'm going to already use the soundtrack. The term butterfly effect in finance is a concept that seemingly small, or may seem a small, localized event. I'm reading this in the background, by the way, okay? Again, the butterfly effect in finance is a concept that seemingly small, localized events can trigger an unpredictable and significant change reaction throughout the interconnected global financial system. In the same analogy, I want to bring this context based on the pattern recognition, as what we do here is mainly pattern recognition based on, again, conventional patterns, harmonic structures, among other patterns in between. So therefore, what occurred on October the 10th was not random, okay? There is no randomness when it comes to these type of formations, as the only trigger, or they can only signify a potential changes within the starting point. A key example of this event, a prior event, occurred also on Bitcoin on the prior all-time high back in December of 2024, last year only, where that was our first short execution. To bring the context here in chart, you guys are all aware, I was looking for this upward trajectory from the lows of 107, okay, to the upper boundary, as well as a measure move, okay? The measure move, of course, did not come at 131 with the smallest conservative target, but we went to 126, okay? The reason why, again, I was focusing at these highs was, again, due to another formation that I was looking for or working on before presenting a short execution. The pattern in mind that I initially have was from an ABCD structure, okay? Only to give a brief context here, that what occurred on last Friday is not random. We're starting with Bitcoin, but I would like to also bring other chart for the S&P 500, giving that the pattern was presented as a bearish butterfly, where it was also a trade setup within the room, where we capture the recent drawdown that occurred on Friday also across the market, okay? So therefore, this is a level I was looking for an ABCD structure to the 1.618, okay? 130s, that was the ideal scenario for a short execution. I was looking among other new information that later printed, okay? What I had in mind initially is this pattern. You guys remember, we have the early identification structure with the upper boundaries on the price action, as well as a lower trend line for support levels, okay? However, my main target did not come at 1.618 for the measure move, okay? With the conservative target as well as the ABCD structure among the new variation or new variable that was later presented. Okay, I was preparing for the setup, however, it didn't come, but I like to see that in the space, everyone apparently got this short. Okay, everybody's an expert when it comes to hindsight capital. Okay, so the confluences I was looking for a short was within the 1.618, also already getting prepared. Okay, reason why I normally like to focus on risk management is due to the inherent behavior of the nature of the market, extremely volatile. Okay, so therefore this is an example of the pattern I was looking on the S&P, on Bitcoin. Okay, pending ABCD structure, as well as if we were looking at the upper boundary. Okay, I was already prepared for this drawdown. Okay, so therefore what occurred recently is not random. Okay, this is an idea I had in mind in October the 5th, 5 days prior to this major drawdown. Okay, however, as I'm not an expert on Elliott wave theory, but as a practitioner of the legends of the past, we also presented the argument prior in discussion in the Bitcoin chat within a room that what we could be looking, okay, was potentially an expanding triangle. Here, October the 4th, I presented an idea only talking in the chat with other members who are practitioners of the strategy. We're talking and I said, we could be looking into the characteristics of an expanding triangle per se in terms of Elliott wave theory if we anchor the wicks. The wicks referring to the upper boundaries, okay, for these connecting points, okay? Again, October the 4th, the same chart. And again, this is not to say we call the move, but what I would like to portray here is that the outcome is not random, okay? However, also important to know that we cut the move from the long side at 108 and the upper boundary, okay? Then, of course, the idea was to build support from the lows to the highs, okay? From the prior low, 107, okay? From this type 2 return, second test, to the highs, okay? Within the common areas of retracement. So therefore, we did not cut the short, but we cut the long and exit, of course, with a comfortable position of 17%. Then we have a decline erasing the entire run from August, right? Started in September, the first run, back to the lows, type 2 return, then the upward traction. Now we have new information, my friends. Where do we go from here? Bringing back the pattern based on Elliott wave, okay, this chart in mind. Those of you who are also practitioners of conventional patterns, such as a broadening top, are we now within this segment of the move? You guys know that our main projection for the macro on the weekly time frame has not changed. We have a pending CD structure for a cipher, a major cipher that could potentially, can this be the beginning? Once again, applying the analogy of the term butterfly effect, that something small can trigger something larger of a bigger magnitude. We do not know, but there were cautionary levels on the weekly already since July, printing divergences on the macro, okay? So therefore, what we're trying to favor is the upward move up until 131, at least, okay? We went to 126, and then we have a decline. From here on, of course, everything changes. Why? Because we now have new information. Once again, applying the connecting points from the upper boundaries, resistance, as well as the lower boundaries as support. One of these pattern or one of these characteristics for this pattern is that they present bull traps at the top as well as bear traps at the lows. However, zooming into a 3-day chart, can we observe now a continuation structure? Again, I'm not an expert on Elliott wave, but oftentimes, apparently, these formations, the expanding triangle appears on wave 4 prior to reaching the wave 5. Again, you guys need to correct me on this. I'm not an expert on Elliott wave. You guys know that on the macro, our main projection or main thesis continues to be for the C leg of the move of this pending cipher. We mentioned that the highest point that this pattern can go is a 1.41, but we were already within the range of ratios that goes from the 1.13, the 1.272, okay, that was tested now in terms of Fibonacci extension, trend extensions, okay, as well as the 1.41 as the last one that we mentioned, a 1.134 before preceding this CD projection, okay? Are we there, my friends? Again, I would think there are cautionary levels already presented. Also, we did a stream on July based on the cyclical rhythm, suggesting that we are indeed entering a cycle high for this month in October, okay? So therefore, the signs of cautionary levels were there. No major changes. Once again, on the macro, if we move back into the weekly, you guys can also go into that chart, swimming with the whales. Okay, that was also another technical proposition we presented for the connecting the highs as well as the lows in the momentum indicators, both MACD and the RSI, suggesting or contradicting variables. Okay, negating the upward traction or the momentum indicators not agreeing with the price action heading higher. Therefore, we have a class A positive divergence since July, my friends, since July of this year. And also bringing back the bearish butterfly, the previous short prior to this major decline was also something similar that was presented in this region, or a shark. We had a shark back at these highs, but I do remember there was another butterfly, potentially maybe in the S&P. No, it was right here. I do remember why, because that was one of the arguments for a short execution, a trade setup within this quadrant, okay? If I zoom into the 4-hour, once again, only to bring all previous analysis also presented within the room. That was a similar pattern also presented on the S&P500, which we're going to be jumping into that theory now, okay? Only bringing the analogy between the butterfly effect. That something small or seemingly small can trigger something larger of a bigger magnitude. Indeed, the butterfly triggered a 32% decline on Bitcoin back in December of last year, pretty much at the top of 108. Because remember, the same sentiment, we're going to go to 200,000. However, we're now in Q4, it's almost the end of the year, and we're still trading pretty much near those same levels. Everyone, from here on, in my opinion, it will be key to identify the behavior of bearish structures. Why? Given the same analogy, that something small could potentially trigger something larger of a bigger magnitude. Butterfly indeed marked the turning point back then, and now moving to S&P 500. Okay, this one a similar pattern also on the 4-hour. This was not random. Once again, we had this pending formation, okay, the W formation, which in fact I was already trying to short the previous pattern within this X, A, and B. Okay, I took a small short, then my stops were triggered. However, we have this formation as a pending W formation, potentially suggesting that a turning point indeed around the 67.92 as well as 68.11 was going to be a turning point for the PRCs all the way to the 0.618. Okay, therefore I was out of this position already last Friday, re-entered this morning, also exited the move. But from here on, my friends, I would cautiously pay attention to any W formation that may be printed in the hourly time frame, even the 30 minutes, okay? Why? Because we do know that something larger may be under development, okay? Now, going back into the Elliott wave theory, okay? The S&P 500 has been indeed within this pattern since October 2022, okay? Again, this is important to me to identify key turning points, okay? Why? Same sentiment at the lows, 50% to the highs. What occurred after? Major decline on April, okay? However, we're now above this region, potentially as a tied to return of this pattern from the highs, from the lows to the highs, bottom to peak. That was indeed a peak in January prior to the decline in April. Now we surpass retest of these highs. However, conditions on the macro, my friends, are now in a delicate phase, in my opinion. Okay? Once again, this is another chart. I was looking September the 30th, marking here an intersection between price and time on the weekly for the week of October the 6th. Okay? You can observe here, marking a turning point, the 180 degrees based on the half cycle, applying one of the GAN principles. Okay? For those practitioners of the GAN aspect. Okay? Now, where are we currently in the price action? We are in the same levels we were pretty much in this ascending Brownian formation. These type of patterns often also indicate that a trend may change on any time frame. It could be the hourly, the 4-hour, the daily, and traders, or at least technical traders, should pay close attention if this pattern present themselves in larger time frames, such as the weekly and the monthly. Okay? We all know that eventually the music will stop. Therefore, if you guys remember the song from last stream, how many chairs are you sitting on right now? Will the music eventually stop? We will see, my friends. Now, I would like to bring a chart based on, once again, Elliott wave concept. Same pattern. This is from Schumacher, okay? This pattern from back in the 1930s. However, if we apply Elliott wave concepts, are we now within the fifth wave? Okay? Are we now within the fifth wave? If so, the fifth wave of this expanding triangle, or ascending triangle in this case, often present what everybody is already talking in the space, the blow off top. But it's important to bring back the blow off top theory was brought already since last year, early last year, or even December on 2023, I believe. Therefore, the blow off top is being postponed over and over, okay? So therefore, if I bring the same analogy, how high can the S&P 500 go? Now, if I move into the same theory, Elliott wave theory here, oftentimes, I need to go and bring the cash market here on the SPX chart on CBO. Oftentimes, okay, this line was my key turning point, or represented, or I was looking at these levels from, where is my chart? Warning sign right here, intersection between price and time, when Monday the 6th, or the week of Monday, or October the 6th, that was on Monday, started Monday, and of course culminated into Friday the 10th for the week on the S&P 500. So therefore, oftentimes the fifth wave terminates between the ratios, okay, between the wave, in this case, wave 2, wave 3, and wave 5, where this is where Elliott wave can be a little confusing, right? Why? Because when we apply trading, comparing to any strategy, Elliott wave, harmonics, GAN, whatever you may use, the execution differs from analysis, my friend, okay? Trading is a complete different game, but a complete different game when it comes to execution. Those who have been in the space for a long time already know that when someone is making projection, is only a talking head, right? Just as a music. So therefore, if we are trying to identify the fifth wave, how high can this price action go on the S&P 500? Elliott wave theories argue the fifth wave appears between the extensions of wave 2, back to the 3, back to the 4, where at the 100%, 68.58. We did not go to those levels, but we near those levels. So therefore, one of the ratios among Elliott wave practitioners is that the 100% indicate the fifth wave, the culmination of this major turning point. However, it also ranges all the way to the 1.618. Huge difference. So now tell me, my friend, how do you execute this trade if you have this range or this range of ratios? That's a massive move. Okay? Why? Because within the theory, the wave 5 or fifth can go all the way to 0.618. That basically represents another 18%. And in some cases, also the 200. So that's a massive move, okay? It could be the case. Never know. However, there's also another key important point to consider when it comes to trading this strategy. How high or how long will the fifth wave last? Elliott wave theories consider that the fifth wave, also in the same manner as the trend-based fib extension for the 100% all the way to 1.618, can also range if we apply the trend-based fib time in the same waves. Wave 2 to wave 3, back to wave 4, where not at the 0.382, but the 100%, okay? The 100% fib time, that will be July 2026. This is ideally how long will the fifth wave may last. Doesn't necessarily indicate that we are going to go up until July, but that is the highest point, the max amount of time where the fifth wave may last. You guys flip a coin, let me know where are we in the price action. What I've been doing is only trying to trade as much as I can all the patterns that I observe based on harmonic patterns, okay? So therefore, in my opinion, markets are indeed key levels, have been pretty much after the first warning sign at wave 3, prior to this major decline, okay? Major decline, of course, we have another W formation among these levels. 1.13 was the last extension we were looking. We're now higher, but we're still within the fib extensions, where, as you guys know, many moves tend to terminate at extensions of prior swings. We're now still hovering below the 1.41 on the cash market, okay? Cash market below the 1.41. Everyone, thank you for watching this stream. Remember, we're trying to exercise risk management. Okay, whatever you're seeing on the space, they're not focusing on the main principle that it comes to that comes with trading, which is risk management. We can all make projections that we're gonna go higher or lower. In my opinion, make your own research, study your chart, determine your positions, do your own research, okay, before executing positions. And remember to live a life with an attitude of gratitude. Everyone, thank you for being here. I'll see you guys on the next one. I hope the stream has been useful. Remember, the macro has not changed. We're still within the same range for the C wave in a similar manner. However, when it comes to the C wave in the cipher, what I'm referring here for the chart on the Bitcoin price is that we do know that this extension is not larger than the 1.41. There's no major range up until an extension to the 1.618 or the 200%. If the 1.41 is violated, the pattern that we're looking on the macro will be invalidated. However, so far, we have indication that something smaller, such as a butterfly, can trigger a cascade of events, okay? And that seems to be the case so far. So let's move accordingly. Remember to trade responsibly. Everyone, I'll see you guys on the next one. And remember once again to live a life with an attitude of gratitude. Cheers, my friends.